Sensex and Nifty end in the green after a range-bound session. The October F&O series draws to a close with 6% gains for both indices as the bulls regain lost ground. Credit Suisse shares nosedive after the embattled Swiss lender posts a $4 billion loss in the third quarter, also announces an overhaul and promises to cut its cost base by 15%. Facebook's parent company Meta loses $67 billion in market capitalization after missing estimates in the third quarter. Mark Zuckerberg defends the metaverse project, which led to a 20% rise in costs. Elon Musk enters the Twitter headquarters carrying a sink as the $44 billion acquisition nears closure. Musk needs to seal the deal by tomorrow to avoid facing a trial. A new performance-linked incentive scheme for vaccine raw materials is on the cards. Sources say Centre could soon allocate up to 6,000 crores of incentives to encourage production of vaccine raw materials in India. Incentives up to 40,000 crores could be announced for 8 new sectors. That's an exclusive. 13 months since cabinet approval, government is yet to decide on converting Vodafone Idea's dues to equity. All approvals are in place and sources say a final decision from the Department of Telecommunications is still awaited. India's women cricketers will be paid the same match fee as their male counterparts, says the BCCI. Women will now get 15 lakh rupees for every test match compared to 4 lakh rupees earlier, but no changes to the annual retainers, where men get paid more than women. Let's start with the day's market action. Dalal Street records biggest gain in the last 3 series while closing a volatile trading day with minor gains. Sensex rose up over 200 points. Nifty gained over 80 points. Bank and mid-caps also ended in green. The October F&O series has also drawn to a close. Sensex and the Nifty have gained 6% each as bulls regained some lost ground. Nifty is now 2% away from record highs. The big international story now. Embattled Swiss lender Credit Suisse reported a worse-than-expected quarterly loss of $4 billion. Consolidated revenue came at $3.8 billion, a decline of 30% compared to the same period last year. Under pressure from investors, the lender unveiled a major overhaul of business, including cost cuts, reducing risk and revival of investment bank First Boston. The bank's new CEO hopes the plan is the start of a transformation into a new Credit Suisse. Geoff Cutmore has the details.
We're going to see this significant cash-raising exercise, 4 billion Swiss francs. That's pretty much $4 billion these days. That will be raised both in a rights issue with existing shareholders and then, as you point out, there is this qualified investor, the Saudi National Bank, that they hope will pony up 1.5 billion Swiss francs, but it has to go to an EGM, a meeting of shareholders for approval on November the 23rd. So we'll see how that plays. Elsewhere, significant cost reductions. They want to shave 15% off the cost base. Initially, that will mean cuts of about 2.5 billion Swiss francs and a major restructuring of the investment bank. The Apollo Group will pick up the securitized products business, and ultimately they reprise the First Boston name. Credit Suisse First Boston, or CS First Boston, will become a new standalone business, and they're hoping to attract third-party funding for that. M&A advisory and your usual investment banking products will be inside that unit. So let's just have a listen in to what Ulrich Körner, the CEO of the business, had to say about this restructuring of the operation in the US.
Credit Suisse First Boston, as we will put it to the market, i.e. the capital market and advisory business, is in itself a very attractive, relatively capital-light business. I think, by putting that together in a separate entity, opening that up, for third-party capital as well, positioning it with these very strong brand and titles of Credit Suisse First Boston is a very, very attractive thing, not only for our clients, but also in particular for our people and talent going forward.
And more global earnings. Tech giant Meta reported lower than expected numbers this quarter, missing street estimates on almost all fronts. The company's revenue came in at just under $28 billion, slightly below street expectations and down 4% year-on-year. This is the second straight time Meta reported a dip in its revenues, and the company's forecast for the next quarter shows another drop. This did not sit well with Wall Street investors. The company's shares plunged nearly 20% in yesterday's trade, wiping out almost $67 billion of the company's market share. Samsung Electronics reported a 31% decline in profit in the third quarter on the back of a big slump in demand for smartphones and semiconductors. The company's chip business, which is responsible for a majority of its revenue, saw a 50% drop in profit. Samsung, however, said that they would not reduce chip production. The company says they expect demand to recover in late 2023. Elon Musk treated Twitter users with visuals of himself entering the Twitter headquarters in San Francisco holding a sink. He also changed his profile bio to Chief Twit, indicating he's the new boss. This happened a day ahead of a court-ordered deadline to close his $44 billion deal for the microblogging site by 28th October. Remember, Musk recently asked his co-investors to prepare for financing the takeover. Twitter's shares will be suspended from trading on Friday. 13 months since cabinet approval, government is yet to decide on converting Vodafone Idea's dues to equity. Ashmit Kumar joins us now. Ashmit, what really is the status?
Well, that's a question that we have been, in fact, asking the government officials for a fair bit now. But as you pointed out, it's been 13 months since the cabinet granted the nod, but the clock is still not moved forward here. Keep in mind that in September of 2021 is when the cabinet, amongst a whole host of telecom relief measures, had also allowed for these telecom government dues to be converted into government equity. Since then, in January, Vodafone had applied, but the wait continues. What's important at this stage to understand is that all necessary approvals have been secured. So whether it's SEBI, looking in compliance with the takeover regulations, SEBI has granted its nod. The Finance Ministry has given its approval. So the file, as we understand, the application as we understand, is currently resting before the DOT, pending consideration. DOT is finalizing a call. Having said that, there are a few aspects to keep in mind. Number one, outstanding dues of Vodafone are piling up. Whether that's tower companies, whether that's vendors, that is a big sore point as far as Vodafone Idea is concerned. Also keep in mind that Vodafone Idea had sought to issue the shares at a par price of 10 rupees per share. However, it's been trading below that price since the month of April. So that has also been another point of concern. And of course, let's not forget, in terms of investors and in terms of money being brought in by the promoters, that's another core concern that perhaps has been doing the rounds. But so far, no clarity coming in from the government on what a roadmap will look like for converting these dues. It's been 13 months since then. No clarity on the way forward.
All right. Thank you very much, Ashmit Kumar, for keeping track of that big story for us. Let's now move on. The pandemic just accelerated the need for Internet of Things technology. That's the word coming from Matt Johnson, President CEO of Silicon Labs. In a chat with CNBC-TV18's Ashmit Kumar, Johnson also elaborated on the company's plans for India. Listen in.
In addition to being able to scale our research and development in the region, one opportunity that I mentioned is metering. So an example would be smart metering for water, gas, electric, you name it. And there's an increasing need for that wireless connectivity that can be valuable on the consumer side and also valuable on the infrastructure and deployment side. So we've seen globally in other regions where these metering deployments increasingly require that wireless connectivity. And we see that same potential and opportunity in India. So in addition to scaling research and development in the space, our intent is to continue increasing our focus on rollouts of IoT technology in the region as well.
Interesting. Let's change focus a little bit here. US President Joe Biden, speaking recently, said that he believes that the pandemic is over. So we're just coming out of the pandemic. It, of course, held a number of interesting lessons as far as the journey ahead is concerned. Just your perspective on what the post-pandemic world looks like and what are the key takeaways in terms of the roadmap going forward for IoT, courtesy lessons from the pandemic.
Sure. I think when, as it relates to the pandemic and IoT specifically, the pandemic absolutely accelerated IoT deployments. Easy examples would be the increased need for digitization at the edge, where people wanted, from a consumer perspective, more devices that are connected to improve their time at home when they couldn't get out. But other examples would be maybe think of healthcare, medicine, telemedicine, where more people required virtual visits, and the need for connected devices, whether it's a thermometer, pulse oximeter, blood pressure cuff that was wirelessly connected to the device that could transmit back during that telehealth visit. All these different applications have been exploding, and there's no expectation that telehealth will go away. The expectation is they'll continue. So I think, if you step back, the pandemic didn't change the ultimate course or trajectory, but it definitely accelerated the adoption of some IoT technologies. And, we expect that to continue.
And news just coming in. The Monetary Policy Committee will hold an additional meeting on the 3rd of November. Inflation has stayed above the committee's target range, 6% for 9 months in a row now. And now the MPC will have to draft a letter to the government explaining why it has not been able to control inflation. This meeting could be related to that. There is another meeting of the MPC in the first week of December. So we'll keep track of that for you, and we'll get you more news on that in a few hours from now. But for the moment, we're going to take a short break. Don't go anywhere. We get you an exclusive interview with Maruti Suzuki's Shashank Srivastava, which has seen strong festive growth in the last 1 month. Don't go anywhere. That interview with Shashank Srivastava coming up in just a bit.